The Bank of Canada interest rate stays at 5% as it made its first interest rate policy decision of 2024. Despite the inflation hike in December, the bank decided to hold up on its policy rate at 5%. The Bank of Canada schedules 8 interest rate policy announcements every year. And this year, the dates are from January 24, March 6, April 10, June 5th, July 24, September 4, October 23, and December 11. Hello everyone, my name is Lay, and I'm a Toronto realtor and mortgage agent, licensed in Ontario, Canada, and serving the Greater Toronto Area. As for the 1 to 2% interest rate cuts that we are anticipating, and I have included in my predictions for 2024, check out that video here. I'll also add it to the description below. We won't see this first rate cut until probably about April. But even if that's the case, we see that the mortgage rates are beginning to come down a little bit. That's promising for would-be buyers for this year. But if you're one of those that are still on the fence, waiting for the interest rates to come down, you have to realize that this also means that the prices will start going up, so it boils down to what is more important to you. Let's not forget that rates are set for shorter terms, 1 to 7 years. Some have longer terms, but the more popular are the 3, 4, and 5-year term mortgages. 5-year rates being the best option for the first-time home buyers. Now, the home prices, which determines your mortgage and your mortgage payment, however, is there to stay for the longest time, mostly between 25 and 30 years in Canada. For instance, let's say you're buying a $700,000 home in Canada at current rate of about 5.24% with minimum down payment of $45,000. That's about $3,904 monthly. If the rate went down to 5% but the price went up to $750K, your minimum down payment becomes $50,000 and your mortgage cost now will be $4,074 monthly. Let's say that it just went up $25,000 at $725, your minimum down will be $47,500 and the monthly mortgage payment of $39.43 monthly. You'll probably say the monthly payment is about the same, but you have to realize now you have more debt and you have to put more down payment, all because you waited. As you know, rates will not fall from the sky just like that. There are a lot of factors to consider, including inflation, unemployment, bond yields, economy, supply and demand, which is at all-time high. It's not in your favor to wait long. Now, let's talk about why the policy rate is important. If you remember in 2023, when the inflation skyrocketed, the Bank of Canada puts the brake to the spending by raising the overnight policy rate aggressively, not seen in 40 years. The majority of Canadians got the message and slowed down the spending. So exactly how many Canadian borrowers are going to renew their mortgages in the next 18 months? And what's the impact of this to them financially? It is estimated that about 3.4 million Canadians are going to feel the pain of renewing, with some mortgage payments double or triple, with the average of about at least 25% increase in the cost of borrowing. Going back 5 years, that's 2019, the start of COVID-19, when we hit a mild recession and interest rates started falling down to about 2.5% by the end of 2019, and as low as 1.8 fixed, 0.8 variable. Now, fast forward to 2024, those rates are gone and will never come back ever. Not at least in a very long time. Now we're looking at rates around 5.19, 5.24. If you got a mortgage of $800,000 in 2018 at 0.8%, for example, around 2020, and mortgage payment approximately $2,950 at mortgage renewal, that will be $4,768 if you're renewing now. That's $1,800 that you need to find elsewhere. So what are the ways that Canadians are going to take care of this? Some will resort to refinancing and extending their amortization to 30 years. Take note, refinancing rate is higher than renewal rate and it's subject to stress test. I'll talk about this in detail in a separate video, which I will link when I have completed recording. Subscribe now so you'll know when it's here. What do you think is going to happen next? Is this a sign of old interest rates coming back? Let me know what you think in the comment section below. This is all the time we have for today. Join me next time as we talk about how this affects the Toronto and Canada real estate as a whole. If you have questions about Toronto real estate and mortgages, give me a shout. My name is Villar-Cisneros, and this is Toronto Living.